Hi, I'm Hannah Wallace and welcome to FinextraTV. Kindly joining us in the virtual studio now is Nelson Chu, CEO of Percent, the technology platform that's transforming the private debt markets with their end-to-end ecosystem, uniting the investor, the issuer and the underwriter in one place. Really looking forward to hearing more on the topic, Nelson. Thank you very much for joining us.
Thanks for having me.
So I've given a brief introduction already there, but perhaps you could go into a bit more detail and talk about the type of technology you're using and also the impact this is having on the industry. Let's start there.
Absolutely. So our technology is pretty unique in the space. The private credit markets are a $7 trillion market without much technology to speak of. So anything we do is going to be better than phone calls, Excel, and email. So it's a pretty low bar at the end of the day. Ultimately, our ability to essentially create market standardization, data standardization, and all those different things helps us to facilitate the speed and the velocity of transactions at a fraction of the cost of what it takes today.
All right, fascinating. Thank you for bringing us up to date. So let's talk a bit more about the private credit space. Tell us, where are you seeing the most demand and activity in the private credit space? And also, how are we likely to see this evolve throughout the rest of the remaining year?
Yeah, private credit has been something that has been in focus ever since the global financial crisis. And so you've seen a lot of demand since the banks stepped away from lending for all these non-bank lenders to appear and kind of fill that gap. And ultimately, it's been even more prominent during COVID, where a lot of these non-bank lenders stepped in to help facilitate PPP loans for a lot of these consumers and business owners who needed it. And ultimately, we're at the point now where it is becoming a part of the everyday life of everything that goes on, right? So for example, a lot of interest has been given to buy now, pay later lenders. Those are all the rage right now. A lot of VCs have put money into it, and there's just been a lot of interest in that space. And naturally, because they are not banks, they also need to secure the capital from somewhere. And that's really how platforms like Percent are able to help them out. On the flip side, from the investor side, we're at a period of time where there's a significant market volatility. And so there's a lot of interest in uncorrelated assets and uncorrelated returns to the public markets. And as a result, private credit as a whole and alternative investments as a whole has been getting a lot of interest from investors as well, who are looking towards ways to be able to protect themselves from the potential market downturn. And private credit is always a viable option for that.
All right, so watch this space, it's safe to say. All right, so let's talk a bit more about the role of technology. How is this playing out in the evolution and modernization of the lending and alternative investment industry? What about that?
Yeah, you can't talk about technology in this space without talking about the data standardization that needs to happen here, right? So prior to Percent existing, essentially everybody was relying upon borrowers to be able to report their own things, which is a bit crazy because every borrower has a different way of reporting. This isn't like public debt markets where there's audited financials, there's required reporting to the SEC. This is almost like a Wild West free-for-all where every borrower does their own thing, and then it's up to the investors to really make the judgment call as to whether what they're reporting is accurate and match it up with all the other borrowers that they deploy capital into. And so where Percent comes in is that we've taken the effort in using technology to standardize and normalize all reporting across the board so that everybody is looking at the same thing. You can compare one borrower to another borrower in terms of performance. You can compare one asset class to a different asset class in terms of their asset class performance. And you have the ability to actually compare one deal to a different deal based upon the deal standardization and deal structures. And all these different things have afforded us the opportunity to really transform the market for the better, make it more efficient, and that way that every borrower, every underwriter, every investor is on the same page, looking at the same information, and being able to transact more efficiently than ever.
All right, thank you for that, Nelson. So taking all of that into account then, how are digital solutions transforming the way investors, borrowers and underwriters are interacting in the private credit transactions? What about that?
Yeah, there is so much that we can do with technology and digital transformation in this space that has really been trapped in the analog era for decades. And again, our floor is Excel, phone calls, and emails. And so there's a lot that we can clearly do there. On the investor front, imagine a world where you could actually see all the investments you can invest in one place. You can diligence them extremely quickly. You can make the investment with one click, and then ultimately you can monitor it after it's done. These are things that we take for granted in so many other markets today that just simply has been impossible in the private credit space. For the borrowers, they have the ability to actually take this process from 6 months to 6 weeks. And with the ability to leverage dynamic market pricing from investors, they can get the best cost of capital they can possibly get in the market with Percent. And ultimately for the underwriter, this is an opportunity for them to be able to source new opportunities, structure transactions in one platform, market it out to an investor base, and surveillance it after it's done. These are things that are all manual historically, and it all can be done through Percent. So we have software facing borrowers, facing investors, and facing underwriters, and they all interact within the same ecosystem, looking at the same data, using the same workflow tools. And again, it's something that other markets already have today. It's been in use for years and just simply has never reached the private credit space, and we're helping to make that possible.
Well, as you say, revolutionary and a really positive note to end on, Nelson. Thank you so much for sharing your insights today. Looking forward to catching up further down the line. But until then, thank you very much.
Thanks so much for having me.